Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock. With news, some market anxiety has lifted today. Locally, the dairy auction results were not as negative as many had feared. Overall prices were down just 1.4% and whole milk powder prices were virtually unchanged. There's a fair amount of relief in these results, especially as the New Zealand dollar's fallen more than enough to counter these tiny declines. Globally, the fear that gripped markets at the end of last week eased today as well, and most markets are a lot calmer, supported by attitudes of investors on Wall Street after their long weekend. However, the IMF has cut its global growth forecast for the third time in less than a year. They did that overnight, at the same time as fourth quarter GDP from Beijing showed that 2015 Chinese economy grew at its slowest rate since 1990. The Chinese data showed industrial output grew just 5.9%, with crude steel production actually shrinking 2.3% year on year, while retail consumer spending grew 11.1%. Their pivot to the services sector is in full swing. Most of the Chinese data was reassuring because there was a sense beforehand things could have been a lot worse in the December quarter. However, the usual skeptics were also out in force. You might say there is something for everyone in this Chinese data release. The IMF's data has the world growth rising from 3.1% in 2015 to 3.4% in 2016 and a tick higher the following year. The forecast reduction, however, is all about a trim for the US, which it now sees at a 2.6% growth. China it sees growing at 6.3% in 2016 and India 7.5%, both unchanged assessments. Neither Australia nor New Zealand figure in these latest forecasts. That slower US growth will clash with their recent newfound bipartisan agreements on the US federal budget deficit. Spending and deficits are on the rise, forecast to go from 2.5% of US GDP to 2.9%. The Germans also see subdued growth. The Chinese are preparing for their week-long New Year festival early this year. The central bank is promising $100 billion liquidity boost over the period in what may be cover for some backdoor stimulus. In New York, the benchmark US Treasury 10-year yield is essentially unchanged today at 2.05%. The oil price is holding at $29 a barrel on both benchmarks today. Warmer weather patterns and rising supply will keep the crude oil market oversupplied until at least 2016, the International Energy Agency said in its monthly report overnight. The gold price has slipped slightly, now at $1,088 an ounce, and the Kiwi dollar has found its feet and risen, albeit not by a lot, but it's higher against most pairs this morning. It starts at 64.9 US cents today, at 93.7 Aussie cents, and at 59.5 euro cents. The TWI is at 70.6. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.